at the difference between, like, for example, Nvidia and Bitcoin versus gold. I mean, you see massive bullish sentiment in both of those other two areas. You see nothing but positive news stories and FOMO that is just everywhere you look, and markets that defy the laws of gravity. It's something that that is almost impossible to ignore. Even people who understand that, professional traders would never touch a market that's going straight up like that, yet you have FOMO everywhere. People are saying, well, geez, could this time be different? When we compare it to gold, as an example, with gold, you have sentiment in the toilet. We've been talking about this for months now, that where are all the retail buyers, even though the underlying characteristics, like for me, it's been, the massive buying by the central banks, right? That's certainly giving it away, so to speak.
In a thought-provoking analysis, Andy Schectman delves into the contrasting sentiments between gold and other markets, highlighting gold's potential for a price explosion. Despite gold's steady climb to all-time highs, Schectman points out the prevailing negativity and sentiment and distress within the mining industry. Moreover, he underscores the disconnect between gold's upward trajectory and the poor fundamentals in the mining sector, emphasizing the significant levels of global debt and dwindling gold reserves. With gold rising amidst falling bond prices, Schectman suggests a growing recognition of inflationary pressures, potentially fueling further upward momentum for gold.
Anyways, with sentiment in the toilet right now in precious metals, and I was scanning over Twitter, and you get these people that are saying, oh, well, your $12 move in gold, what good does that do you? Be careful spending all your $12 in one place. This was as gold was moving up $12. Comparison to, Bitcoin defying logic, defying gravity. And these people who are making these comments weren't even born probably when I started in this industry, and realize that if you make 6 or 7% per year, you are a rock star. But let's just talk about it. So in the metals market, you have sentiment low, you have the mining industry upside down distressed, and really kind of disconnected, if you will, from the price of gold and silver. Well, let's just focus on gold for a moment, where gold has been going straight up, and yet the mining shares have been horrible. The capital spending in that area is at unprecedented lows. And this is at a time when there's a massive amount of overwhelming levels, if you will, of debt worldwide, both publicly and with the governments. And when you talk about, there's been talk for years of peak gold. New discoveries are rare. And, the quantity and quality of the reserves that are already there are beginning to deteriorate. And so when you see gold moving in this light, let's also remember that gold is now rising as bond prices are falling. This is another big deal, right? And because for a long time, and this is a very significant development as far as I'm concerned, one that shouldn't be overlooked in any capacity, because for a long time, bond prices and gold have been positively correlated, where if the bond prices go up, interest rates go down, making gold more attractive, right? Because that's Gibson's paradox. Gibson's paradox is the inverse relationship between real interest rates, and, we have to take the CPI as being legit when we know it's not, but let's just pretend it is. And as the price of bonds have been falling, interest rates have been rising, and now we see gold moving in that environment where, even in a real interest rate environment, a positive real interest rate environment, gold has done very well. And I think that's the market's way of saying that they see inflation being a bigger problem than the Fed is leading on to. And we've been saying that for a long time too. So I guess what I'm simply saying to you is that when you look at the other markets reaching all-time highs, it's on the back of amazing optimism and enthusiasm and you could say irrational exuberance. And yet gold is quietly reaching all-time highs on the heels of tremendously poor fundamentals that would only, I believe, add fuel to the fire as people start to wake up to this. I think the potential for gold to go much higher is real.
Continuing the discussion, with gold breaking through resistance levels and reaching all-time highs, Schectman acknowledges the uncertainty surrounding its future trajectory. Yet he emphasizes the significance of central banks' continued purchases and gold's resilience in the face of rising bond prices and interest rates. Despite the prevailing skepticism and lack of mainstream allocation to gold, Schectman remains bullish on its long-term prospects. He urges viewers to consider the unique dynamics at play, including geopolitical tensions and economic uncertainties, which could potentially fuel gold's ascent. As gold continues to defy expectations, Schectman suggests that perhaps this time could indeed be different.
But we have broken through resistance. There is none at this point above. Where does it go? Don't know. Is this the beginning of the move that we've all been expecting? I don't know. But I will tell you that when you see the central banks buying as much as they have, something we've been very consistent in saying, when you see gold rising in the face of bond prices that are falling, meaning interest rates are rising, it's rising in a real interest rate, positive real interest rate environment, it's very big. And when you see a market that, as we've said how many thousands of times, you and I was listening to Matthew Piepenburg talking about this with Elijah in his last interview with you just the other day. He said the same thing, 0.5% allocation. So nobody owns it but the central banks, the most well-funded and well-informed traders. The industry has been left for dead with virtually nothing in exploration, and the mining shares are at their lowest level ever, disconnected from the price of gold. The fundamentals would say that this is something that shouldn't be reaching all-time highs, yet very quietly, as everyone is fixated on Nvidia and on Bitcoin, gold is making all-time highs. Where does it go from here? I guess we will see. But I would tell you that I am very bullish ultimately as for where gold ultimately ends up, but I don't expect it to be a straight linear line. It never has been. But maybe, just maybe, I'll throw it out there, maybe this time it surprises us. You know, we're up $130 or so over the last 2.5 trading days. That's not a trend, but it is the beginning of one, perhaps. Let's see where it brings us at the end of this week. And with a sustained rally, I think this is something that people should look at and understand that maybe this time it is different. Maybe this time it is different because of all of the things that we've talked about, whether it be, you know, the craziness here at home, the open borders, the election, the Justice Department, the lawlessness, the money printing, the craziness. Or maybe it has a lot to do with the weaponizing of the dollar, or the fact that our brain-dead Secretary of Treasury goes to Brazil in Russia's backyard, part of the BRICS, and says, we need to confiscate those assets, not just freeze them. We need to confiscate them. And you know, the hubris, the idiocy, the flat out stupidity of the Secretary of Treasury telling the world in Brazil, a member of the BRICS, that we need to confiscate those assets, not just sanction them. We need to use it to rebuild the Ukraine. I mean, if that isn't a shot across the bow of the BRICS, if that doesn't cement the rallying cry, I don't know what does. So maybe this is the beginning. One of these days it will be. It's like the little boy who cried wolf. That's me. And I'm fine with that. It is. But I know the wolf's coming. Just don't know if we're at the last page of the story yet or not. I guess only time will tell.
In today's discussion, Andy Schectman explores the stark contrast between gold and emerging assets like Bitcoin and NFTs. Despite subdued sentiment, gold quietly hits all-time highs driven by central bank purchases and rising interest rates. As geopolitical tensions and economic uncertainties persist, gold's trajectory remains promising. Subscribe, like, and share your thoughts below. Thanks for watching, and stay tuned for more insights.